Hello, Chiban here. In this question, we have a problem about income taxes. It has multiple portions. I'm going to do all in this video. You can see in the table there is a first table gives you standard deduction for single and married jointly, and a second table gives you tax rate. It's called marginal tax rate, and the first column represents tax rate and second column represent what could be the bracket for filing individual and filing married couple. But notice that in this question, Isabella is married and has a combined income of $79,000. So pretty much she's filing as a married couple. So we are interested on this last column in this second table. Okay, she has one child. Again, she has a one child. That's very important because she's getting $22,000 tax credit for the child. She contribute $8,250 to the retirement saving account adjustment. So here, this amount $8,250 is the adjustment. Okay, so now she can claim the following deduction, which is property taxes, $6,000, $5,500 mortgage interest, $1,500 charitable contribution, $9,000 is medical expense. All are itemized deduction. Okay, so remember that this itemized deduction. Okay, first question, find the Isabella adjusted gross income. That's the first question, and remember that her income is $79,000, right? Let me subtract here. 79,000 79,000 minus adjustment is $8,250. So I'm going to put here $8,250. That is adjusted gross income 70,750. So I'm going to put 70,750. So that's her adjusted gross income. And next question tells you, will Isabella use the standard deduction or itemized deduction? Okay, so say or here, she has to use either standard or itemized, but you got to find which one is bigger. But notice that standard deduction here is for married filing jointly is 24,800. That's her standard deduction. Let's find the itemized. What's the itemized deduction? You add all the deduction here. Here is the deduction. Let's add all them. $6,000. Put on here 6000 plus 5,500 plus 1,500 1,500 plus charitable contribution is 1,500. What's the next? 9,000 qualified medical expense. 9,000. So her itemized deduction add up to $22,000. But look at the standard deduction, which is 24,800. So she's using standard deduction rather than itemized because standard is higher. So will Isabella using standard deduction or itemized deduction? Answer is using standard because this is higher. Okay, now we're going to find Isabella taxable income. Notice that taxable income is going to be adjusted gross income minus deduction. So here, adjusted gross income is going to be 70,750, 70,750 minus, remember that this is adjusted gross income, we found it here, minus deduction, which is here standard deduction, that's 24,800. 24,800. That is taxable income. So as a taxable income, I'm going to put $45,950 as a taxable income. Okay. Again, it's surrounded near a cent. So I don't have a cent here so far. That's all I'm going to put. Now, next question is compute Isabella tax O. So that's what we need to do a little bit work here. Let's go back to the, I just clear that off here. Let's go back to the table. This is what we're going to see. So notice that her taxable income is 45,950. So let's find appropriate column here. So remember that I'm not using this second column. I'm using third column because she's filing as married couple. So her taxable income is going to be in this bracket. So she's paying 12% of her income, taxable income, and 10% of her taxable income. This is the marginal tax rate. So she paid 10% up to 19,750. So what I'm going to do here, 10% is 0.10 multiplied by 19,750. Thus is $1,975 you're gonna pay by 10%. What's the remaining? Remember that her taxable income is 45,950. So 45,950 belongs here. Now is remaining amount is that goes by 12% is going to be $45,950. Maximum she has to pay up to this number minus 19,750 because she already pay up to 19,750 by 10%. From above 19,750 up to 45,950, she got it pay by 12%. So basically you multiply this difference, which is $26,200, apply for 12% tax bracket. So you multiply by 0.12, so that's going to be $3,144. She has two different tax we got to add. By 10% she's paying $1,975. By 12% she's paying $3,144. So total going to be, let's add it, 1975 plus 3144, that gives you 5,190. But here's the but. You know what's the but? Here you go. Since she claimed $2,000 tax credit, she's getting this money back from IRS. So actually she owed this much taxes when you do the calculation, but she's getting $200 as a tax credit. You subtract that, so you'll get $3,119. That's what she owed the taxes for. $3,119. That's the CO for the taxes. Okay, and now we have a different story here. Now Isabella W2 says she paid $3,160 taxes in 2020. So if she pay this much, that means while working, every time she got the paycheck, her employer deduct some federal taxes. That's called tax withheld. She pay this much. I mean, this much taxes is already taken by IRS, right, from every paycheck in that year. So this much taxes she already paid, but she owe this much. In other words, she pretty much pay more than she owe, right? Remember that she owe $3,119, but she pay $3,160. So she must get the refund by the time, but how much dollar? Remember that $3,160 minus, because she already paid this much every time in her from her pay stub, and then you subtract $3,119, $3,119, so you get $41. She got refund back pretty much. Okay, that's all you do. So submit the question and you get everything correct. So thank you for watching. This could be quite a long video. I know there's a bunch of the questions you got to answer. I hope this helps. Thank you for watching. Bye.